Good afternoon, everybody. This is Dennis Wilton with the Active Trend Traders. I want to welcome everybody to the Making Money Trading Stocks and ETFs and Options Occasionally webinar that we do every Friday. Join us from Zurich, Switzerland, Michael Bishop. Michael, welcome.
Hello, thanks for having me.
And glad you're here today. It'd be awesome. Let me do the disclaimer, and then I have a question for you from a European standpoint. All materials are presented for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is not an indication nor a promise of future performance. Here's a little bit about who I am. Started this crazy work of trading for a living back in 2006. It's 12 years now, and then actually started trading back in 1989. Some people might think that's a long time. Always remember that the best trade of the year comes around about every 2 to 3 weeks. And so right now I'm waiting for that 2 to 3 weeks to be completed so that we can find a good trade. But we're looking all the time for that. Before I get into that, Michael, you know, we're sitting here, we're watching the markets kind of really have kind of a challenging time. There's some stocks that are going against the market, others that aren't. But we know that, and I'm going to flip up a picture here of the. Here's the S&P. Well, that's on a intraday chart. Let me find the other S&P. There we go. Okay. Let me throw up this S&P. Kind of an interesting week. Okay, here's Monday. Okay, huge down day. I mean, just selling back off into, past lows. Turned out that would have been a great time to buy at the bottom if you were going to. But as I spoke about earlier this week, we've got this really kind of like very shallow type of momentum shift. And so price actions get a bid on Tuesday, a bid on Wednesday, spike up on Thursday, and today we're getting another down day. Now, a lot of people are relating that this is because of the issue going on between China and the United States on tariffs. There are discussions about them. I guess, a lot of free market people are worried that the tariffs are going to screw things up. But how is that being digested in Europe? Are you guys concerned? Is Europe concerned about the potential trade wars between the U.S. and China?
You could answer this question really with numbers, and you can clearly see that. So just looking at the volatility, the historical volatility of the last year,
right?
That America is very nervous. China, Asia, so in other words, US volatility extremely high.
Right.
China and Asia, Japan volatility high, and Europe volatility also not especially high. So you can so if there is a market where you really can't say it's on panic mode, then it's basically all European stock markets.
Okay. And so, so if I'm interpreting what you're seeing as basically being that Europe is kind of like in a wait and see mode of they're going to let the China and let the United States do their big clash of the Titans, and then they'll see what happens from there. Okay.
Yeah, and I mean it's also difficult to say because there are some hopes that Europe is kind of the big winner of this battle. Because, for instance, take Boeing. If Boeing has to pay more for their steel and aluminium, Airbus is more competitive.
Gotcha. Okay, so they're kind of like they're waiting for the war to happen, or the trade war to potentially happen, and then to go in and sweep up the spoils. So that interesting perspective. Anyway, this is the VIX. This is the volatility index for the S&P, and as we see, from 2016 to 2000, the end of 2017, we had kind of a nice little trend to the downside. It was really a crappy time to be selling options premiums, but it was on its way down. Since 2018, we've had a pop back up in our volatility. And it actually came up here and jumped up here in February, up here in the 50 point. That turned out to be the turnaround day. But it's now, what's kind of interesting, a little bit different than what we've been used to seeing here, is we've got this, well, I don't want that. How about that? Okay. We have this window here where volatility hasn't just rolled back over and fallen down to historical lows. It's maintaining and hanging up here. And people have been talking about how volatility could in fact be an issue going in, throughout 2018, maybe into 2019. And it'd be interesting to see as we get closer to the midterm elections this year, how that's going to impact volatility. But we'll wait and see on that. So, well, thanks for that input. I appreciate that. Let's get back over to and stay on track. There we go. Okay, just a reminder about the 5 pillars of active trend trading. We're actually doing up a nice little presentation on this, but the 5 pillars of active trend trading is what it is any trend trading system or any trading system actually needs to have these 5 elements. And one, it has to identify what we're going to trade. And we only trade really high quality growth stocks and our premier ETFs. In this case, this was BABA. We have to know when to enter and base, and what are we entering that, basing that entry on, which for us it is the active trend trading system. When to exit, is there the third pillar, and then basically what strategy we're going to use. In this case, we use a strategy where we bought the stock. Those of you who've been following along with what we've been doing with some of the entities this week, we took a trade on Netflix earlier this week. We basically jumped in a Netflix option with the knowing that it's going to have earnings about 2 weeks from now on April 16th. And we basically just doing it the same type of way. We triggered when we're going to get out. So we have to know what also the probability of our success. And for the active trend trading system, we hit about 65% success ratio. Win-loss. Objective of the How to Make Money Trading Stocks and ETFs webinar is just basically some timely, actionable intel review at the end of the week so that you can be prepped to go into next week with some positive expectations. Here's where we're sitting as of. The month of March was just kind of a seesaw kind of month. I almost call it like a meat grinder month. One of the entities that we are going to be taking a look at and keep an eye on for bonus trades is gold seasonality. We are really hanging in there, waiting for this, basically between the June-July timeframe, where gold tends to turn around and then have a really strong run. This is a seasonality chart that covers over 40 years worth of information, and so these tendencies have been in place for have been repeated every year for 40 years. Now, do the charts of gold look exactly like this? No, they don't. However, what we have noticed and found out about seasonality, when the seasonality chart shows that we should be getting into a trade, that typically coincides very nicely to a positive run in things like gold, and I'll show you that here shortly with the gold miners. NASDAQ basically kind of flat lines across the front of the year. This year's been a little bit different. Russell, same thing, flat lines through about February. Then you get into a bidding, then it catches a bid in March and runs up nicely. On each of those entities, keep in mind, worst case, hang in there, have plenty of cash for when October turns around, because that tends to be when this entity performs the best. And so here's where we're sitting with the active trend trading system as of about 9 o'clock this morning. So strategy one, basically we're in a trade on strategy one with UCO. We may have gotten stopped out of that one. We already took some profit off the table on that one. No, maybe not. But we're looking to actually jump back into that trade for some additional upside. This is based on energy continuing going up, because Michael, one of the things that's quite interesting, Michael, is that the global economy continues to do quite well.
Yes.
Yeah.
But I mean that's not that uncommon. Yeah, that's the stock market is a discounting mechanism, so it thinks about how things will look in 1 or 2 years.
Yeah, this is true.
So I would not. Yeah.
But what I was going to say is that from an things like, it appears like the economies are going to keep growing for at least a couple of more years, 2 to 3, or even on the outside projection is up to 7 years from now. And so that could drive energy prices higher. And so oil may be a good potential buy in the near term. One of the other things, we did a strategy 2, Netflix. We got jumped into that at 14.10. We closed one of the contracts at 19.20. So and this is part of our objective of generating, $500 to $1,000 worth of income on our cash flow on a weekly basis. And so as you can see, we had the Netflix it was actually 5.20 rather than 5.10. No, it was actually 5.10, not 5.20. We're going to be holding this onto this trade through the 16th, or up to the 16th. And if it hits 28 at $28 on this $14 April 20th 190 call, we'll go ahead and close for 100% gain on that. We'll just, there's no reason to look a gift horse in the mouth. And so we'll close out that for about $1,400. So that between the two, you'd be looking about $1,900 over the next couple of weeks. Waiting to open some positions in the Leaps position, and on the premium webinar that starts at 12 noon, we'll be talking about that Tesla trade that we did a little bit earlier today. And so that kind of covers what we need to cover for today. 2018, a year of breakthrough and restoration. I am going to get in here and take a look at the entities. And then also, I want this one. Okay. Let's get in here and look at the SPX. SPX. This is almost a client, I'm sitting here looking, on the left we have a daily chart, on the right we have a weekly chart. I've identified where we could potentially find levels of support. It worked its way down in this level, and it's based off, here's where the origin of the last significant strong move up, and it's down in this brown area, and that covers up from 25.48 up to 25.86. We came down and we hit into that earlier this week, and then we get at least a part of a rebound. But what's one of the big differences between these rebounds that we've been seeing here, and let's say the one we saw earlier in February? Well, the one in February, it went on to a really nice little move up over several weeks. We came back down, bounced, first part of, midsection of March. Notice, a little bit of a rebound, but not a lot of rebound. And so that's one of the things that has been noticeably different about this. And so what has happened with in this case the S&P? The S&P jumped up here, hit off the 100-day moving average, which actually was just below the 50% retracement off of this move from this high here, early part of March down to the recent low. Attempted to push on up, but then hit this, showed a doji small body candle, spinning top type, and then reverse lower today. Now the reversion lower today, Michael, it seemed to be it was primarily all had to do with the issue with China. That's the only thing I can really latch onto out there for why this happened.
Yeah.
And so,
but I mean, if we are right, we should see a rebound very soon.
I agree. And so that's why I'm identifying this area down in here, where if I go down and tickle this, that's interesting, that's a technical term. If I go down and tickle this area where it just approaches it, or it gets down here to the 200-day moving average, or if it drops below the 200-day average, we could actually use coming back up through the 200 as our trigger to get into a trade. Now, what would we want to? I'm not really that fond of what's going on with the S&P. What I like better than the S&P is NASDAQ and the Russell. Similar type situation here. I can basically draw a similar type box across this area here. Okay, about there. And just drop that down. There we go. That's an approximation. Remember, so what did it do last time? Earlier this week, it's come down. It's tested it a couple of times and rebounded. Tested over here, nice rebound. This is the rebound from back in February, on February 9th, and so we get this big bullish engulfing from which was on Wednesday. That is still in effect, and so that has not been taken out. So for me, what I'm looking for, Michael, is just some kind of a retest down, anywhere in that brown, that little tan zone down there, with a nice strong move, with hopefully a stronger move on the momentum, because right now momentum is still not, the weekly momentum still pointing down. I'm looking here on the market forecast. It's longer term weekly momentum still pointing down, although we're getting some confluence here that's below the 20% level. We're getting a double line cluster here, which tends to resolve itself to the upside in somewhere between 1 to 4 trading periods. And in this case, this is a weekly chart that's between 1 to 4 weeks. And so we could hammer down. Now, on the flip side of this, if things do go from bad to worse, and we take out this level, the 6250 level, well, how far do we have to go to be to hit that 20% mark? Well, let's go here. Right now, the lows are sitting at about 12%. So where's 20%? 20. There it is, right about there, which is close enough. And so that's down at the 5750 level. And so we're about half there. What's the significance of 20%? That's when the official definition of a bear market kicks in. Does this look like a toppy market? Is this different than what we've seen in the past or recent past? Of course it is. We're getting these much huger volatile days and weeks. So basically, how do we trade this? Well, one of the things that has to be done, you have to go in and have to define where your support, where your resistance is, And so that way, if you're going to take a down trending trade, it would be from resistance, moving down. If you're going to take a counter trend up trade, you need to find your levels of support and make sure they hold, and that's where you'd want to be. Go ahead and get into the trade. Again, TQQ, I like that. And so TQQ, we get back down here to the 130 to the 127 level. That, I would say that, I have got a green light on that with a stop immediately below the 126.81 level. Russell, similar type situation. Nice sell-off on Russell. Some may ask and say, is this an evening star type of pattern? Well, not really. I mean, it's reversing just a real quick 3-day uptrend. A evening star tends to reverse after a longer uptrend moving up here, and it has more significance and more meaning. But what has happened here is on the way up, we took up the 8, took out the 100, stopped at the 50, reversed down today, and now are just taking back, taking out those moving averages on the way back down, which is not a positive sign for the entity. Again, TNA. TNA, I basically threw up this fib on TNA just to give you an idea. Between 62.50 and 61, that's where I would plan my next buy on this. If I blow out the bottom, where am I going? Well, the next level is down here about the, just go across here. About 56 level, and again, the weekly momentum indicators are still pointing down long term here. Nice reversal here just prior to the zero line, so it appears like the downtrend continues to be in effect. And again, my target for right now is in this area for a potential reversal. Now, and one of the way, if you didn't want to trade this bounce down here, if you pulled down below the 200-day moving average, you could use a 200-day moving average as a trigger to get into a trade to the upside. So, Michael, you got anything, buddy? Or you see any?
Yeah, interesting time. I mean, and everything is moving. Also, currencies and international markets.
That is correct. So, is the dollar strengthening? I've got
nope. At least not today. That
okay.
No, it's still in an up. I mean, you can look UUP.
That's what I was looking for. I've got that. And here we go. UUP. Yep. Still pointing down. They also said that the Japanese yen was down today, and that often means that the market's going up. But I'll bet you that the yen actually got a bid. Where are you? 6J, I think. Yeah, there it is. It had been going down here, but as you can see, it's bouncing off the 50-day moving average. And if the yen rallies, well, the market's going to continue to go down, down, down. So let me show you one other thing, and then we'll basically, I want to talk about gold just really quickly. Gold is bouncing all over the place, similar to the other entities. This is the futures. Look to pick up potential on gold at the extremes. So let's say JNUG. Where's the extremes? Well, yeah, and it feels so dadgum uncomfortable to be thinking about, well, I want to pick it up when it's down, after it's pushed down to the low. But it's like, go ahead and just start putting some orders in, about $13. If you don't like that one, you want it to get a little bit lower, You know, you can go down here to the 1275 to 1250, another one down here about 1210, because in June we anticipate gold to take off. Now, this looks very positive from a weekly standpoint. We've got the TSI clicking over, but very shallow. We've got the market forecast down here at the lows on the longer term momentum, still just kind of pushing sideways. Similar over here. TSI starting to tick up, but getting just you know, this could be just basically, whoops, where we go. And this is the last thing I'm going to show you guys today. Basically, got this little wedge thing working here, and what this is right here in the middle, we're seeing this with a lot of entities. It's the meat grinder, and if we get into a position close to this middle section, not knowing exactly which way it's going to go, there's a tendency to get stopped out, drop into the bottom side, or if we're short a position, stopped out going to the top side. So how do you trade it? You learn how to be patient and trade it off of the extremes. If it gets up here, you trade it to the downside, or if it comes down here, you can trade it to the upside. And if it drops down to the lower level of support, you trade it to the upside there. So, okay, Michael, that's all I have for today.
Okay. What does the seasonality say? If we have a weak Friday, will we have a weak Monday again?
Well, Monday, yeah.
And the second question is, would you think we have a little rebound in the last hour?
That's a great question. I have to,
because it looks kind of free falling. It gets, I would say, a couple of minutes, and then we are at 2.6.
Yeah, I mean, here's the S&P.
I have the
you're
ES
right.
chart there.
Definitely free falling for right now. Let me throw up the ES real quick. And those of you who don't follow the futures, it's a good idea to start following the futures, because you can put in alert, even if you're not trading futures, you can put in alerts based on their extremes, and it can be very beneficial and help. And I don't know if my ES is going to come through or not. Come on, wake up. I've moved my office because we're continuing the renovation in our house downstairs. So I moved, there we go, my office down into the, back into one of the back bedrooms, and I'm a little bit away from my hot spot. So, yeah, right now I would not be doing anything with this until it gets where? Until it gets down here in the, basically down into these past lows. There we go, come on. There we go. And you can just draw this little box, because see these little spinning top candles? Then here's the origin of buying, takes off out of here, and we just drop in a little box in there, and that kind of like is the determining factor. We're not going to do anything until we get down in here. We're not going to do anything once prices start to push up until it gets up there next to or close to a moving average or a level of resistance, and that's where you act. If you're watching your charts and something's going on in the middle, you just say, I'm not going to do a darn thing until I get my edge. And for the current market condition, your edge is at the extremes. That's the way I look at it. So I hope I answered your question, Michael.
Indeed.
Okay. Well, with that,
thank you.
Have a great weekend.
Have a wonderful weekend.
Enjoy your spring. Michael was saying that they had his first couple of days of where it's really felt like springtime weather over there, and here in Hawaii, we've had nothing but humidity and a lot of rain. So Oh, well, I'm glad I'm not a tourist. Okay, everybody, have a great weekend. God bless everybody. And if you're a premium member, we'll be back on in about a half hour. God bless everybody. Aloha.
Thank you. Bye.